Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business stories, their context, their relevance and impact. I'm Govindraj, Ethiraj. The railway budget and the economic survey are both in as we now await the Union Budget 2016 to be presented on Monday, February 29th. The railway budget has pitched for a higher capital expenditure at 121,000 crore rupees against 100,000 crore rupees on the hope that the economy will grow too. Now, the economic survey, on the other hand, has pegged India's growth at 7 to 7.5% in the fiscal year to March 2017, which means that there is no expectation of further growth. India faces a catch-22 of sorts. Should the focus be on public investment and thus harm fiscal deficit, among other things, or should the focus be to help trigger more private investment, of which there has not been much either? Similar to demand, which too has slowed. Now, what are the biggest challenges ahead for the Finance Minister Arun Jaitley as he presents his budget, and what are the areas that he can focus more on to bring greater capital into the system, to create more industry and jobs, to galvanize the stock markets, and most importantly, keep the taxpayer and you, the citizen, happy? To discuss this, I'm joined by Rashesh Shah, Chairman and CEO, Edelweiss Capital, Saugata Bhattacharya, Economist, Axis Bank, Ajay Bagga, Chairman, OPC Solutions. Rashesh, we've just seen the economic survey coming in. We've also seen the railway budget, which has asked for higher capital outlay and expenditure. What's your sense as we go into the budget? What are the key things that we should be looking at on the left-hand side and the right-hand side of the government's book?
I think on the right-hand side, the important thing is to get the investment cycle kick-started and getting the capitalization of the PSU banks, augmented. So I would guess these are the two more important ones, and I would add a third one, which is some social programs for rural areas, because I think rural distress in the last 2 years have been quite a bit. So I would say the three more important things I would like to say will be programs for rural investments and all, and a lot of the rural programs. B would be capitalization of the government banks, and C would be investment in infrastructure to get the investment cycle kick-started. That is, I would say, on the right-hand side. On the left-hand side, we all know the most important thing the finance minister would be grappling with would be about whether to stick to the fiscal consolidation plan or to allow it to loosen up a little bit. I, for one, think he should stick to the plan, but raise resources through asset sales. I think government is sitting on a lot of assets, including equity shares in Stuti and various other liquid assets, including real estate. And this is the time to think boldly, raise some resources and use them to put them to use, which will get the economic kick started.
So you've not touched private investment. Is that something that you assume will happen automatically?
No, I don't think a lot of private investment will happen automatically. I think it will take some time. And all the more it is important for government spending to get started. If you see, the three real vectors of investment will be government investment, FDI-led investment, and the private sector in India investment. I think of the three, the private sector investment is the weakest one as of now, because the private sector balance sheets are stretched and they don't have the risk capability nor the capacity on their balance sheet to make fresh investments, especially in infrastructure, where a lot of people have been burnt in the past, either because of approval processes or delays and everything else. So I do think government is the best placed to invest in infrastructure, because they can get the approval part sorted out and get this kick started. And then I'm hoping that in a few months the FDI-led investment, because we have seen a lot of FDI projects being announced, especially in electronics and defense and all those areas, where a lot of FDI-led investment will start. And then maybe a year and a half down the line, I hope that the Indian private sector will start investing again.
Are you expecting or hoping that you would see any bold decisions, and if so, in what areas?
So as I said, the one important bold decision I would like to see would be in the area of asset sales, and raise a lot of capital via asset sales, because government also needs to start thinking like an equity investor and say that, okay, I've got all this, all these assets which are very well developed by now. Maybe I can sell some of that, raise the money, like recently they sold some stake in NTPC, which I think is a good thing. They should do a lot more of that, because NTPC is a great company. It's already evolved quite a bit, and it can either be a government company or a private sector company. It will do equally well. So maybe it is time government use NTPC to raise even more resources by selling shares and use that to fund infrastructure, to fund rural programs, and more importantly to fund the PSU bank capitalization. So I would also want to see some bold action on the PSU bank capitalization. I would like to see some bold action on truly rural investment, because I think rural infrastructure is one area where there is a huge return from a social point of view for investment which are made there.
Right. So if I were to put the same question from the market's point of view, how would you see the ability of the markets to absorb issuances from the government, and overall, how do you project investor sentiment both institutionally and at an individual level for the next 6-9 months that potential announcements from the budget could play out?
I think the markets have the capacity, the liquidity has been there in the market, and you have seen recently, in spite of the overall sentiment not being very good, a lot of IPOs have gone through, companies have been able to raise money, including the recent NTPC, offer for sale that also happened. So there is liquidity in the market. Our estimate is between LIC and Indian mutual funds, they will have close to 140 to 150,000 crores to invest in the coming year in the market. So there is a lot of funds available, liquidity is there. FIs obviously are selling, and I think they will continue to sell at least for the first half of the coming year. But outside of FI selling, which I expect is going to be about 20 to 30,000 crores, there is about, as I said, between 1 lakh to 1.5 lakhs of funds available from LIC and the Indian mutual funds. So there is obviously capacity to absorb the government issuances. The issue will always be prices, because right now obviously equity markets are low, prices are low. But I would argue that if government is selling something at this prices also, then they are investing also at this prices, because even the fresh investments are a lot more cost effective as of now. So in a way, it is akin to an investor who is selling some asset to invest in another asset. As long as you are doing it in either good market or bad market, you should be relatively indifferent.
Right. So, Saugata, let me begin with you. As we go into the union budget, what is the tonality that you're picking up from the railway budget in somewhat general, and the economic survey in specific?
The sense that I'm getting is that fiscal prudence has really caught on to their fancy. Even in the railway budget, I mean, there were no populist measures. I mean, we probably would have, I don't know whether you noticed that remarkable fact that passenger revenues per passenger, which is in other words rail fares,
has gone
are up 12%.
Yeah.
So there are different ways of doing that, but
Yeah.
it is up 12%.
Yeah.
Freight rates are about 1%. So there's that already that tone that is coming. Even today, the economic survey talks about the credibility of the fiscal deficit, the fiscal deficit target, the fiscal consolidation being paramount in this environment. So my sense is that they are completely aware of the need to push growth. But on the other side, I mean, they do not want to drift too much, at least too much, from the path of fiscal consolidation.
Right. So if that is the case, then what are we setting ourselves up for, or what have we set ourselves up for?
Well, I mean, obviously, I mean, they are massively resource constrained. The railways is, the government of India is, state governments are. So we need to figure out a way first to cut out all flab, which is again what the economic survey has talked about.
Yeah.
The
including 100,000 crores of subsidies to people
that,
like
that
you and me.
Too. That's right. I mean, so whatever, but we need to be prepared for this. That there's a lot of flab that needs to be excised from the system, and tough measures are needed. Obviously, there will be opposition to some of this, but I mean, this is where you will create some space for further productive spends, the capex spends that we talk about, without destroying any semblance of fiscal probity that is needed at this point in time.
Okay. What about you, Ajay? What are you taking away? I mean, and markets obviously have reacted well. So what are they reacting to? I mean, what is the good news that they're seeing in this?
See, markets were happy that fiscal consolidation stays more or less, and the government is now recalibrating into underperform and under the promise and over deliver. That seems to be a big change in these two budgets. So even Mr. Prabhu's tonality was very understated. He's achieved a lot. It's a mammoth task, Indian Railways. And there were some questions on where will he get the funding and the pace, but he's charting a course for a very big ship. Right. Similarly, the economic survey we read more as if the world was great and it was a blue sky phenomena, this is what the finance ministry would do. So don't read too much into the economic survey vis-a-vis the budget. There's a big difference between the bitter truth. Like agriculture will never get taxed. All the politicians are laundering their money through agriculture income, for example. No questions asked, this is the cash I received. You saw one chief minister even getting caught doing that. His farmland was the most productive in the country ever. So agricultural income will never be touched. So this is some amount of blue skying.
But right, you talked about agriculture, right? But on the other hand, the rural economy, almost half, half of the economy depends on it, is facing stress and perhaps one of its worst times. So how do things, how do we allocate resources more efficiently or differently then?
Well, this is going to be, if there's one message that this budget and even probably the economic survey has come in, this is budget for Bharat. So agriculture, front and center will be agriculture, the rural ecosystem.
And Rashesh was just telling me that as well. Yeah, go ahead. Yeah.
And this is needed at this point in time. I have been saying this to whoever cared to listen to me, that agriculture, without fixing agriculture, you want employment, you want a proper migration, you want proper urbanization. For that, you need to fix agriculture. 2 years of stress have brought out so starkly the stresses that we see. We are now beginning to go back into worries about food security. Nobody wants to work on farmlands anymore. So I think the crop insurance scheme that the Prime Minister keeps talking about has already been rolled out. I think that's a critical part. And it is precisely the subsidies that we were talking about, the cutting back these subsidies. Fertilizer subsidies need to be retooled major. So, these subsidy rationalizations are likely to create the space where you can fund programs like the National Crop Insurance Scheme, which is a fantastic program. Irrigation. The Maharashtra's Jal Yukt Shivar program, say for instance, has created wonders. Micro irrigation programs, that needs to be replicated. These programs are the ones that need funding.
Right. So, Ajay, what are you betting on? At least from a market's point of view, what could be the one or two things, or the bold things perhaps, could actually give some life into the markets, maybe bring in more capital flows?
So 4 things, one, the government finances itself. I think that will be very critical. How are they addressing it? The fiscal consolidation program, that the government sticks to it. Second is rural, the focus back to rural and putting money into the farmers' pockets. So consumption, kick-starting the consumption cycle in the rural phenomena. Third is infrastructure, because private sector will not invest in infrastructure, government has to do that. So you have to really overlay a lot of money, whether you borrow from the Japanese, whether you borrow from the Gulf, but you have to put in a lot of money into infrastructure. And fourth is the PSU banks. Those are very critical. What the survey is pointing out, the credit growth has gone down to 5% to industry over the last 1 year. So you need to again remove that logjam from the credit cycle. Yes, a lot of pain has to be taken. Survey has mentioned over-leveraged corporates, stalled projects which are not going to see the light of the day. Just remove those projects in whatever way you can and restart the cycle. That is critical.
We are running out of time. So let me get your two best or your two biggest expectations. Let me begin with you, Saugata.
3.5%, number one, and probably more funding for the National Infrastructure Investment Fund.
Okay. And in all, are you seeing this as a budget which is not going to be too daring, perhaps, compared to...
I would expect a budget that's not too daring. I would expect a rational budget, modest in as exactly as Ajay Saab said, modest in intent, but implementation being the first thing that needs to be looked at.
Okay.
A lot of work has gone on the ground. They should communicate better all that they have achieved, and I think it will be pragmatic, balanced kind of a budget. Stay on the steady course. The difficult path is what this government has chosen. Stick to that. That will pay dividends in the longer term for the country.
Right. We've run out of time. Thank you so much. We need to go in for a break. Coming up on the other side, we'll look at tax and infrastructure. These are two critical areas, and see what's lying ahead in the budget. Stay with us.
The disclosure scheme for black money was introduced for the first time in the 1965-66 budget. T.T. Krishnamachari was the finance minister. Minimum alternate tax or corporate tax was first introduced by Rajiv Gandhi in his budget in 1987.
The Black Budget, February 28, 1973, presented by Yashwantrao B. Chavan. Its name comes from projecting high fiscal deficit of over 550 crore rupees. Provided 56 crore rupees to nationalize insurance companies and coal mines. Focused on keeping an uninterrupted supply of coal. Felt interests of mine workers were served in the government setup. Taxpayers asked to factor agricultural incomes to decide the rate to pay income tax.
Dr. Manmohan Singh's path-breaking budget of 1992-93 cut import duties from a peak of over 300% to 50%. He also liberalized the economy and promoted foreign investments. Dr. Singh introduced the service tax in his 1994 budget to tap the growing sector.
Welcome back. Indirect tax and energy and infrastructure, two areas that are pretty important when it comes to understanding where the union budget is going. MS Mani, Senior Director, Indirect Tax at Deloitte, India, and Sanjay Jadhav, President, Sterling and Wilson Powergen, join us. Thank you both for joining us. Mani, let me begin with you. So GST, of course, we never met the deadline that we were supposed to meet. So assume that we will set new deadlines. What could they be?
It's very difficult to hazard a date, but I would say anywhere between October 16 and April 17 should be good enough for GST.
Okay.
Because irrespective of the parliamentary process, the government has done a lot of preparation on GST.
Okay. Give us one or two examples.
They have published the business processes which are going to govern GST. So in terms of GST, how will the returns be filed? How will the payments be made? How will the refunds be organized? Now, all of these have been put together in business process documents, which to me indicates an advanced level of preparation as far as the government is concerned on the GST process.
Right.
So we might see an announcement in the budget in terms of the GST date.
Right. And of course, we would wait for the other part of which is the more political part. So let me come to you, Sanjay. Broadly, are you expecting anything in the budget in terms of allocation towards energy or power, or do you feel things are already moving along, things have looked up, and therefore maybe a budgetary intervention is not so warranted?
I think on the power side, a lot of states are already becoming power surplus. So power situation in India over the last 3-4 years has already improved. I think solar and wind are the two renewable energy resources which are going to see a little bit push from the budget side.
Okay. What about, so then there is the issue of finances of state electricity boards and the fact that we've already carved out some of them. So do you feel that is going to strain resources?
Yeah, it will, but the initiative on Uday program, I think is going to have a better effect on the DISCOMs and their finances are going to look better. Now, whether the states are going to really finance this is a big question mark right now. But if it happens, then I think the DISCOMs are going to look better and generation is going to look better. But if the Uday program doesn't go the way it has been planned, then you are going to have a little bit of disturbance on the financial side on the DISCOMs, which will impact the generation side and also the distribution to the end consumer.
Right. Okay, Mani, let me come back to indirect tax. What are the 2 or 3 areas that you are broadly expecting changes? And I'm talking about significant changes and hoping for significant changes.
See, one area that we have been hearing is that there is going to be a relook at many of the excise exemptions. There are too many exemptions in excise at present. Some of the exemptions are conditional, some of them are unconditional, some of the exemptions are end user based, and typically if we are planning to move to a GST kind of a situation, exemptions do not have too much of place in a GST situation because they break the value chain.
Right.
And possibly, therefore, this offers the government a very
so that's
good,
in
a very
keeping
good
with the
window.
GST move. Okay, so what's next?
Similarly, when it comes to service tax, so in service tax we have a negative list and again a separate list of exemptions. So possibly a relook at those also. Some of them may not actually be required, and some of them may have made.
But are there more areas that could potentially come under service tax? Anything that's been left over?
Not really. Not really, because in service tax today we are on a negative list, which means that excepting the things that are carved out, everything else is already covered by service tax.
So possibly there will be a bit of tweaking to remove some of the exemptions or remove some of the conditional issues. But otherwise, service tax broadly is very, very broad based.
Right. Okay. On the administrative side, are there areas that you expect some action?
Yeah, certainly. So there has been significant amount of noise made by industry in respect of the litigation process and what it entails for them. So we have had a large amount of unnecessary litigation in all the indirect taxes, and in today's world that litigation is also leading to a cost because the moment you go one stage in appeal, you need to make a pre-deposit of some amount of the money.
Right.
So possibly there is a very good case for bringing in a merit-based duty payment at the stage when you go in for an appeal, rather than a mandatory duty payment, which needs to be made irrespective of the merits.
Right. Okay, Sanjay, let me take you a step back. If you look at the total amount of power being generated in India and being consumed, we're obviously still at a deficit. We also have the advantage of lower coal prices and lower energy prices thereof. What's your sense in terms of fresh investments coming in? Is this a good time to get in? Is the environment suitable enough for investments to come in? What needs to be done there, and what role can the budget play?
See, if you look at coal-fired power plants, and let me touch upon the deficit part. We were at one point in time close to 6% deficit on power, which is, I think, right now it is negligible on the most of the states, but it can be 2 to 3% overall, even if you take the southern grid where the major shortfall is. Coal powered, I think, is not going to see large investments coming in. One, because the projects which were already under implementation are already supposed to, they were supposed to take off, but they are still getting delayed. No new investment is coming in. And there is a big thrust which is coming on solar and wind. And if you see the solar, the way it has happened over the last 6 months to a year, when the power charges were close to 12 rupees, 13 rupees, at one point in time 17 rupees a unit, is fallen to 4.5, 5 rupees. So there is going to be a huge investment which will come in solar, similarly in wind. So that is going to put a little bit of pressure on the coal side.
Okay.
So there is not.
But you feel the quantum is sufficient to create that pressure on thermal?
Not right now, but 5 years down the line, yes, there is going to be.
And you're seeing the momentum in that
Yeah.
direction. Okay.
Because anybody who is going to invest in coal today is also going to look at what is going to happen on the renewable 5 years down the line.
Right. So therefore, you're saying the budget could pay more heed to the renewable side rather than the.
Absolutely.
Okay. And what specifically could that be?
I think there will be some soaps coming in for investment in solar as well as wind. There has been a lot of support from the government side over the last 2 years, and that is the reason why you are seeing such a huge investment which is coming in solar.
Okay.
And it should continue over the next 4 to 5 years till it comes to a maturity level.
Okay. Mani, can I come back to you? If I were to ask you to list the 3 things, I mean, between administrative and procedural that you think need to be addressed at whatever cost, what would they be?
I would say item number 1 would be a very clear roadmap and a final date for GST.
Right.
And that's something which requires a lot of preparation for industry, and I think they are entitled to it. So an uncertainty in terms of when GST is going to happen, is it going to happen, is not good for business. The second would be some amount of rationalization in terms of the procedures that we have. It could be to do with the refunds, it could be to do with the litigation. Now we have good intentions which are not unfortunately translated into the procedure, and that makes India as a country very, very indirect tax litigation prone. So some amount of rationalization in the procedure for refunds and litigation and all of those would be item number 2 on my wish list. Item number 3 would be some kind of a directive that the laws with respect to indirect tax should not be changed mid-year. Now indirect tax is a notification and circular based tax, unlike income tax. And consequently, we have too many material and substantive changes which keep happening throughout the year. That again makes it very difficult for trade and business to plan what they should do. So some kind of a direction which is given which says unless it is extremely necessary, we should not be having changes which are made by notification.
What about the rate of taxes? I mean, a lot of taxes have been increased, for instance, on oil, and of course, while we've not felt it because prices of oil have been fallen, the government has kept raising excise and has benefited from it. But it also shows that the government can keep raising tax rates without any opposition. So, as such.
Yeah.
So, is there a way to address that, or should that be an issue at all? Or?
It would be very difficult to address that. I mean, I guess putting a tax rate into a framework where the government is not able to tinker with it may also turn out to be, not a very good solution.
Right,
so
and that was one of the reasons why the GST bill was
right.
itself was under. No, but one is not saying constitutional
Right.
limit, but in general, should there be a
yeah, possibly there should be some kind of a band beyond which they are not permitted to go without a specific sanction. So similar to what happens in companies, where for certain kinds of resolutions they require 3/4 majority. So maybe some kind of a band could be found out on rates,
Right.
and beyond that band.
But
maybe
otherwise,
they need
rates
to
in
go.
themselves, you're quite comfortable with.
Yeah, rates in themselves, when we compare them with other countries which are similar to India, they don't seem to be too unreasonable.
Okay. Last word, Sanjay. What's your sense on what India's power, how bright India's power future looks like?
I think it looks very good. It looks very good. Particularly, it is very important because on one side, the government is pushing for Make in India, Digital India, smart cities, and the backbone of everything is going to be power. So there is a lot of focus from the government, also from the industry side, to ensure that you have 24/7 power availability, because any investment, particularly abroad investments which are coming into India, and if you are not going to give them reliable power,
Right.
now it's going to be difficult. People are not going to invest because your cost of manufacturing is going to go up.
Right.
So making power reliable and available is going to be the
Right.
key
And that's,
thing.
of course, is the larger challenge of infrastructure, and that's in keeping with what our guests have been telling
Absolutely.
us earlier as well. We've run out of time. Thank you so much, both. We've run out of time on Policy Watch. We'll be back next week, same time. Thanks for watching.